In this episode, we're talking with Nicola McDougall, the chair of the Property Investment Professionals of Australia, otherwise known as PIPA, and we're going to explore the results of the 2024 PIPA Investor Sentiments Survey. It appears that the rate of investors exiting the market is continuing to rise. However, some of our assumptions as to where and why they're selling need to be challenged after reading the survey results. What's going on?
Welcome to The Elephant in the Room. This is a podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
And I'm Chris Bates, mortgage broker, recently ranked number 5 in Australia out of over 18,000 brokers in the annual MPA Top 100 Mortgage Broker Awards. Before we get started, I need to let you know that nothing we say here can be taken as personal advice. We always recommend you engage the services of an appropriate and experienced professional.
Today, we want to understand why increasing numbers of investment properties are being sold, and we'll be talking with Nicola McDougall, the chair of PIPA. PIPA is a property and finance journalist and the co-author of a number of property books, The Female Investor, Creating Wealth, Security and Freedom Through Property, the third edition of Property Investing for Dummies, and the first editions of Buying a Property for Dummies and Property Investing Essentials for Dummies. Nicola was the former editor of the Australian Property Investor magazine, former head of corporate affairs of the REIQ, and has been a voluntary PIPA board member since 2014, taking on the role of chair 2022, and I joined the board not long after that. So today we're going to discuss the results of the 10th annual PIPA Investment Sentiment Survey, and thank you so much for joining us today, Nicola.
Thank you again. It's very nice to be here with you both.
Nicola, you're our number 1 episode ever.
Last year,
your episode went off like a frog in the sock. 50,000 plus on YouTube. Now we've had a few in the 20s. We've had a lot of downloads on a lot of other episodes, but your episode obviously hit a nerve. Have you got any idea why you think that happens? I mean, it's interesting, right? Because your research is very it's quite comprehensive, right? And it gets really into the mindset of what investors are thinking. And do you think this current survey that you've just completed has the same sort of insights and we're getting some good learnings out of it?
Yeah, and as to the first part of that question, Chris, I would like to think it's just because of my general awesomeness,
of course,
and my talent as an interviewee. No, I have no idea. But hey, thank you so much. That's, really amazing, really amazing. The survey is actually quite interesting because it's our 10th one this year, so 10th annual survey. Every year over the years, it's obviously evolved, and this year especially, it evolved significantly. We decided to make things difficult for ourselves and rebuild the whole thing from the ground up, which was a great idea until you actually had to do it. But what that meant was, so as I say, each year we want to be making sure that the survey is asking the correct questions of investors, either prospective investors as well, new investors, long-term investors. We want to be making sure that we're on the hot button issues. We're working out what they're doing, why they're doing it, where they're doing it, and I'm talking about investment properties there. So it's quite late in the afternoon. So this year it was twice as big as last year, and there was some nervousness about how that would work, but I was really, really happy, from the support of all of our PIPA members, especially. We were able to secure just under 1,300 survey respondents, and that's powerful sort of statistics, especially when our survey took the best part of 25-30 minutes to complete.
Yes.
So people actually spent the time to reflect on their investment journeys, last year and then this for the year ahead. And I thank them for that, because it actually allows us to create this amazing data set. So I get to speak on the show and, potentially be downloaded again another 50,000 times.
So when it came out, you got the results, right? And you collated them and you gave them to some company to, I'm sure, to make it all pretty. But when you looked at them, was there things that just really stood out internally and even externally, who's looked at it so far, and you think, hang on a sec, that's really changed. That's actually really interesting. We hadn't thought about that.
Yeah, what was interesting is that the volume of investors who are selling, the percentage was higher than last year, and that was a little surprising. And there might be some chatter about, oh, well, it only went from 12% to 14%, but the devil's in the detail, isn't it? And if you've got a 2 percentage point increase of investors selling, what does that actually really mean in regards to supply of rental properties? I guess certainly over the last few surveys that we've had, when we have been drilling down much more into investor sales activity, some of the results, perhaps for those of us in the know, are perhaps not that surprising. I mean, that first survey that we did in 2020, which I've spoken about before, helped to overturn the interstate land tax here in Queensland. That was a big splash, because up until that point, no one had really bothered about investors' sales activity at all, because I guess we didn't have to, because we had a reasonably balanced rental market over long periods of time. So in regards to gravitas, the data within this survey, there is so many different data points that we're going to be able to actually extrapolate in different ways with this new platform that's being constructed for us, which is great. So look, I think the biggest surprise for me was probably the volume of investors who had exited the New South Wales market. That was very surprising to me. The fact that Victoria and Melbourne was on the nose wasn't a surprise, but it's more on the nose than it was last year. When you do some comparisons to the year before, last year investors were really, really keen on Perth, and we all know how well the Perth market's done over the last 12 months. So when you actually do some compare and contrast with the different survey results over the years, it's very telling. A new question that we had in there this year, which was about holding periods for those investors who had sold, which we'd never actually asked that question before. And I was really surprised that there were so many in there that actually had only owned that property, or 2% had owned it for less than 1 year. But, so I think it was, off the top of my head, somewhere, around about 50% of those investors who'd sold had owned it less than sort of 5 or 7 years. And that's not even one full market cycle, and I was questioning. That was a really interesting data point from the survey, because it really sort of started to show, and I guess we'll be able to find this out when we can do those other data extrapolations. Why are actually investors, specifically those investors who've only held for a short term, why have they sold? And it'll be really interesting to find out what the actual results are when we can drill down a bit further than just on a national level, which we have at the moment.
I think if you do look into that tenure, the period of tenure, there was nearly 20% was 3 years or less.
I know.
And so given that those people would be the most impacted by interest rate rises, so that's sort of
the peak of the market.
Yeah, yeah. So there's some sort of, but it also begs, the question is like, well, what were they thinking? Like to be so, I guess, hamstrung cash flow wise, that they have no flexibility to be able to absorb. I mean, they must have known. I mean, you would imagine most people would expect the interest rates were never going to stay at 0.1. I mean, the official rates at 0.1% forever. That they only had one way to go. So that is in itself a bit sad. That there's, I would think there'd be a big chunk of that cohort that possibly not future planning enough. They're possibly making really short term decisions rather than long-term decisions, which obviously with property is really important. I think the other thing too is that the changes, or the rate of change, if you like, so the selling out of Melbourne was still high, but it had slowed from last year, whereas the selling out of Sydney, a much smaller percentage, but in terms of the increase over the previous year, was the biggest increase of the lot, right?
That's right, exactly. And obviously you're in Sydney, Veronica. You know more about that market than me, sitting here in Brisbane and often talking about things nationally. And we just had our PIPA webinar just before the show, and we were talking about that as well as we could. But I must admit that actually stood out to me, because what's that about? Like, I would hazard a guess as I don't own any property in Sydney. I wish I did. But I would hazard a guess that you don't sell out of the Sydney market.
Well, you try not
too quickly or too easily, because generally speaking, over the last 20 years, you've done quite well, and it's very difficult to get back into that market, right? So, well, I know that you've done some media for us on the survey, specifically for New South Wales and Sydney, so thank you for that, Veronica. But what are you seeing on the ground? Because I'll throw that back at you, because I can sit here and say, well, I think it's because of X, Y, Z. And I do think there's an element of protest selling there, perhaps some of the rental reforms that are coming through in Sydney and New South Wales, like in other parts of the country. But it was really noticeable. Like you're right, it was the biggest jump. And what is the reason for that? Because Sydney actually, in regards to our results over all these years, has been, not at the top in any reason at all, in a good way. You can just carry it as there and it's doing its thing, but it's never been the top place to invest or the top place where people have sold. It's always just bubbled along doing its own thing. Yeah. So what was the difference between August last year and August this year?
So just so the listeners can get a bit of context here, in last year's survey, 8.9% of these investors had sold in Sydney, whereas this year it was 14.9%. So that's a significant increase. Melbourne, however, was 21.7%, down from 24.8% last year. So you can see that the numbers of people selling in Melbourne and even in Brisbane was the highest, right, at 26%. Yeah. So the numbers selling in other capital cities is clearly greater than the numbers selling in Sydney. However, the proportion of people, the increase has been greatest in Sydney. And obviously, there potentially be interesting to see that further analysis, because how many of those potentially bought the top of the market within the last 3 years? Being the most expensive city, they've got to have the highest amount of debt. And obviously, as mortgage rates go up, then they are hurt the most compared to everybody else. So maybe there's some of that in there. Talking with selling agents, there seems to be a lot of one-bedroom units coming on the market, and this is what a lot of agents have said to me. And with sort of apparently spring, brace yourself, there's a lot of that coming on. Why are they selling? They're investors, and they just had enough of the cost. I think when you look at the one-bedroom unit owner, that's a different type of investor, perhaps. It's somebody who's bought a house or bought a two-bedroom unit even, or bought, a townhouse. So maybe it is a demographic of the type of owner. They potentially, the odds are that they're only going to own one investment property, because 73% of Australians that invest in property do only own one. So the odds are that it's one property. And, they probably haven't seen huge amount of capital growth in that space compared to other types of properties as well. So maybe that they just get to the point where there's attrition. They're worn down, and finally, I've had enough now. So they might have just run out of their buffers, from their COVID buffers. So it's hard to know. I'd love to know, I guess, further analysis of this data might shed light on that. Any thoughts that you've got there, Chris?
Oh, look, I'm just reading also through the survey here and going, there's so many questions, and they're all very interesting, right? What's interesting when I'm looking at this is that, new investors in the market are absolutely not going anywhere near new property or even apartments. They're going for existing houses. And so when you're talking there and you're saying, real agents are saying we're selling these apartments, well, investors aren't going to buy those. First-time buyers are going to buy them, right? And that's really shifting the rental supply, right? Less every time one of those flips hands from an investor to a first-time buyer, yes, that first-time buyer might have been renting an apartment similar to that, but maybe they weren't. Maybe they weren't even living in that city. Maybe they were living with family. Maybe they were co-sharing an apartment, etc. So it's not always a one-for-one rental supply drop.
No, it isn't.
And demand flips. The other interesting thing that I was sort of reading here is that there's a real negative sentiment towards government intervention, rental changes, like changes to land tax. And you'd think as a, being, a little bit in the middle, right? Just being a bit, you would say, okay, they've impacted things. They haven't been as bad as you think. But you can see reading this is that people have got a lot of negative sentiment towards. Is that something that you've noticed as well, Nicola, is that it's really, maybe it's the straw that's broken the camel back, is that we just can't trust the governments. They're going to keep tinkering. They're going to keep being anti-us as investors. It's getting harder and harder. I'm just going to call time.
100%. And I think, the last 3 years of the surveys, that's when we've been asking these quite specific questions on selling reasons, and every one of those surveys has shown that some of the top reasons are government intervention in some way, and then that could be the much maligned new land tax down in Melbourne and Victoria, for example, and it's really killing the market down there. Or it could be tweaks or changes to rental reforms like we talked about on the show last year, where investors, depending on which location you are really feeling under the pump. They feel like they've got a tenant for life. There's clearly changes to the prohibiting no grounds evictions in some states and territories, not all. It's only a proposed amendment in New South Wales at the moment, but unfortunately it does look like it will be coming in. Look, I think in Victoria, Ben Kingsley just said there's been something like 133 rental reforms there. I mean, your head spins. I mean, one of the questions that we asked in the survey, I don't know if it actually made the report, because if we actually had a report for every single question, it would be War and Peace. And probably that is pretty much like the property investment market at the moment, War and Peace. But the majority of investors sort of said that they had to rely on their property managers to have the information about rental reforms communicated to them. So you've got all of these state government changes, and I've been involved in a few stakeholder meetings around this here in Queensland, and when they're deciding to do all these things, they don't have any strategy to actually communicate it to the people that are actually that it impacts the most, apart from tenants, which I presume tenants associations do that, but they have deeper pockets because they do have government funding. But that was really interesting that most investors, well, the vast majority of investors use professional property managers, which is a big tick, obviously. But then also they are all relying pretty much on their property managers to be able for that information to be passed on to them. So you're just like it's kind of like, and perhaps sometimes the only way that they're getting that information is through the media. And if they're looking for a reason to exit a market for whatever reasons, and it will be more than one, let's be honest, then that would just be another reason that they would add to their list of, this is just all too hard. There's this change, there's that change. I don't know what's going on. I'm out.
It's a real burden on the industry, I have to say as well. Interestingly, I was just judging a number of the REI awards, and one of the categories that I was judging was the Property Management Award in Victoria. And even just reading those submissions compared to other states was really, really interesting in just, all of the property. It was front and centre of every submission, how they have to be on top of legislation. I mean, this is their job, of course. Yep. This is not a pity party. This is their job. But the challenges associated with it being on their shoulders to communicate that to the landlords or the RRP, as they call them down there. They're a registered rental provider. Landlord's very out of fashion as a term in Victoria.
Off your tongue, doesn't it?
Yeah. And the tenant's not a tenant. They're a rental, I can't remember, property, I can't remember. Anyway, the point being, though, because the communication to the marketplace wasn't very good, and so to landlords directly from the government, then the property managers are communicating this to their landlords, to their clients, and there's pushback because they don't know, why are you telling me that I've got to do this, I've got to spend that money, I've got to do this, I've got to do that. Now, rightly or wrongly, and I'm not actually in terms of the sentiment behind habitation standards and things like that, I'm totally behind that sort of stuff, but it's how it's actually implemented into the industry is a real issue. And of course, if you've got owners, property owners or rental providers who are feeling vulnerable to these seemingly random, changes that are an imposition, I should say, on them, then that does put pressure. And I guess if there's all other things being equal, you might withstand that. But if you're actually also suffering cash flow pressures and whatever else is going on, and then land tax and all the rest, you think, oh, bugger it. It's just the tipping point, isn't it?
I think I actually feel a lot of sympathy and empathy for actual, the profession, people working in property management or the real estate agency owners, because often they're not getting a lot of notice about any changes to their policies and procedures that need to happen in regards to, new legislation that's sort of turned up. It might not have turned up, but it might have been back and forth for a while. Then all of a sudden, well, this is stopping from, Tuesday week or something. And, they have to actually enact all of that within their own businesses very quickly. And it's just sort of like they kind of a scattergun approach. They're looking, state governments around the nation, apart from WA, I'll say this, pulling this lever, pulling that lever, well, we'll push that button, we'll do this, we'll do that. If they throw enough at it, they hope that they'll make enough noise that people won't, keep asking, well, what the hell's happened to our rental markets? But here we are in a situation where vacancy rates continue to be at record lows, and they've been like that for a couple of years already. So I just, your head spins. Your head spins with the amount of changes that are out there. And, as a national association and as the spokesperson for that a national organisation, it's very, very hard for me to keep abreast of everything that's going on. Only recently I learned some stuff about South Australia, which made my head spin. And, it's really, really getting very overwhelming.
Well, we've also got the problem of 8 different jurisdictions in this country as well. And in New South Wales, obviously, you mentioned about our looming no grounds eviction legislation. I know you've had
amendments come out, actually, the draft amendment.
Has it? Okay, I haven't actually read it yet. But so, I know you've had a lot to say about that. And in its intent, I don't have a problem with it personally. I actually see that, we want good tenants. We want to keep good tenants. But it's interesting, and I need to find the source of this, and perhaps you might not even know it, Nicola, but I read a survey earlier in the year that actually indicated that not all tenants actually want long leases, for example. They want the flexibility to be able to move on if they want to, and so, I know
they can do that, though. They could just give notice and go in any time they like. It's true.
And landlords, I'm a landlord. I'd love a tenant to have a 5-year a good tenant to have a 5-year lease with built-in, pre-negotiated rental increases. I'm fine with that. Actually, it gives me stability. I'm totally fine with that. But, you put that to a tenant, they're often not so keen, as it turns out. So I think that there's this a lot of assumptions out there about what tenants want versus, when you ask them, they don't necessarily want that. They don't want to be evicted. Surely, of course, they'd like to leave on their own terms, and I get that. One of the sort of larger figures in the real estate industry said to me that what that will do is actually take out kindness out of property management. And I thought this was a really interesting perception. This is John Cunningham actually said this to me. And the reason we were talking about that, he said, because the thing is with the no grounds evictions, it's designed to stop kicking out a tenant so that you can then relet it with a new tenant who can afford more money. And when you've got a rapidly rising market, when rents are rising really fast, it can happen that the market rent and what your existing tenant is able to pay, there's a disparity. And so that is, that's what it's designed to stop. But what it also means is that if you've got a really good tenant, a lot of landlords will be prepared to keep that tenant at a lower rent because they know they're good and they want to keep them in there. And this is quite common. This isn't just this isn't rare. This is actually quite common amongst landlords that I speak to anyway. Right. They're happy to keep that at a below market rent to keep that tenant happy. Now, the problem is, though, that gap between below market and the market gets wider and wider and wider. They're doing themselves a disadvantage if they'll never be able to evict that tenant should the time come where they need to redress that. And so that's what I think that's what John, I'm putting words in his mouth here, but I think that's what he was alluding to when he said it will take kindness out of property management, because you won't be able to, it will not be good management to have the discretion to keep a good tenant at a lower rent when you really need to be regularly increasing it.
More commercial type leases. Where it's, 5 years sign on the dotted line here, you've got to make good, and there's inflation, all these types of things.
That'll never happen in residential,
but, the hardest thing for those of us that have been doing this for a long time is in some political circles, clearly we are having more luck and influence, but it's been very difficult the last few years to be heard. No, not just to be heard, because we've been given opportunities to appear at public hearings or to produce submissions or all of that stuff, and we take our time, we take the time out of our other professional lives, and we go along to these things, or we prepare submissions and all of this sort of stuff. And apart from that one time with the interstate land tax, which was a national campaign against that, most of the time it's been a complete and utter waste of our time, and that's really frustrating, and it's annoying. Because then we get this, these legal amendments land in your lap after you've been at public hearings and put in submissions, and they haven't listened to a bloody word you've said. And I feel that many of them out there, yes, the property investment sector has more representation than we have had in previous years. And I think that they need to be seen to be giving us a voice, but they do not listen. And I get very, very frustrated by that. And, what you've just said, Veronica, why do they not believe us, either as me as an investor myself, or the fact that we represent, hundreds of people working in property investment advice, and by proxy, all of their thousands upon thousands of clients who are property investors. Why do they not believe us? Or when we're producing surveys like this with empirical data that is statistically robust, or even anecdotal, when we go to them and say, do you know what? We want long-term tenants. We want people in there for the long term. If they're good, we're happy. Everyone's happy. They will stay. We'll keep the rent increases moderate, or perhaps not at all. And because we actually don't want to have an empty property for 2 weeks or 4 weeks or whatever it is in between tenancies, we want our tenants in there. And the vast majority of investors and tenants treat each other with dignity and respect via the use of a professional property manager. So we know this to be true. These are facts. Unfortunately, they just do not believe us. It's like they have such bias against anything apart from their own way of thinking that for these last couple of years, you can see I'm getting very passionate about it, but it's just smoke and mirrors, wanting to be seen, to be engaging with the industry. I don't know how many times I've been invited to things, people, when they do not care whether I'm there or not. They have no intention of talking to me, but they need to be seen to have invited someone from the landlord side of the equation or whatever. And yet we go through these motions and we do these things, and then we still end up with terrible legislation, which is making the rental crisis worse. So I'll just stop my soapbox there, but that's the reality of the seat that I sit in, that many of us, including my friend, obviously Ben Kingsley, and many other people, that do these types of things for years, and they just don't believe us, and it's just one of the most frustrating things I've ever experienced in my life.
I'm on a personal mission to help more people make better property decisions, and you can find out all about what I'm working on at veronicamorgan.com.au. There you will find resources for first home buyers, details about my buyer's agent mentoring program, information about my newest project, Preferential, proactive property management in Sydney, or if you're looking to buy your dream home or investment property in Sydney's inner west, eastern suburbs or lower North Shore, you can connect with my team at Good Deeds Property Buyers. And if you'd like a 30% discount plus free postage for my book Auction Ready, How to Buy Property at Auction Even Though You're Scared Shitless, and yes, I'm a potty mouth, use the code ELEPHANT at the checkout.
If you're looking to buy your first home, thinking of upgrading to a new home, or purchasing an investment property anywhere in Australia, we would love to carefully guide you through this journey and importantly get the finance right. Please reach out to myself and the team at flintgroup.au. Well, I think it was interesting in his survey. It looks like there's a lot of them are a big proportion of homeowners, right? I think it's like roughly 90%. And a lot of them obviously are investors, right? So it's not the typical demographic. So what your survey is really pushed towards is, the homeowners that are also investors, right? And then also ones that have got, more than usual as well. So these are usually...
Our survey definitely skews more educated, because if you think about the people that are, that are going to potentially be filling out the survey, it goes out throughout all of our members through to their client databases. And generally speaking, if you are a savvy homeowner or property investor and you believe in the value of paying for a property investment professional, a qualified property investment professional, or a PIPA member to help you in your journey, well, you probably, you're you're probably going to be sort of a bit more educated than most. And generally speaking, they probably own a few more properties than the average as well.
Yeah, that's right. And so you'd like to think, though, like if you have been educated, you're sort of at that situation, you've been thinking about buffers, etc. But when you read through this, around 50% are struggling, right? 10% are reading their going cash flow wise backwards. 40% are saying they're barely hanging on. 34, roughly half of it is saying they're doing okay. Well, yeah, they might be doing okay today. That doesn't mean if you do this survey in 12 months' time, they're still doing okay, right? And so what you're saying is that when I look at these numbers, 50% of that demographic are struggling.
Yeah.
And, when you say maybe 15, 20% are thinking about selling or have sold. And so if that part of the market, though, with, high
they're probably a bit more savvy.
Yeah, exactly, struggling. What's the other investors that aren't on your sort of survey? And what happens if they just consistently start to sell out of the market? And yeah, they do want to re-enter, but that doesn't mean they can re-enter. A lot of them might have to sell before they buy. A lot of investors do want to keep investing, but maybe right now they just cash flow won't let them. So if they're not allowed to come back into the market because they can't, and they're actually selling, I wonder if, in 12 months' time that, you're still going to see such a big investor exodus when you look at that and you think that 50% of them are struggling and, to maintain their cash flow.
One really interesting stat, Chris, and this is in my head because I was talking about it on the webinar just before. We always ask investors in the survey whether they're, positive, neutral, or negatively geared at the moment, or negative cash flow. This year, I think, was it about 60-something percent of 62% of investors said that they had negative cash flow, right? Last year, it was around about 55 or 57%. But if we go back 2 years to the 2022 survey, it was 30% of investors who said they had negative cash flow. So it's more than doubled in 2 years. Clearly, 13 interest rate rises, but we've had, a plethora of other sort of increases of other holding costs and things like that. So, the volume of investors who are now in negative cash flow has more than doubled in 24 months.
And I think that's interesting too, because the reason for selling, for those people selling, the interest rate rises isn't number one.
No.
It's actually other costs.
Yes.
Yeah. So I thought that was really quite interesting, pardon the pun, interesting. Yeah. But also investor sentiment, Colin, because we're also, at the moment, investor lending is up. So you've got on one side of the equation, you've got people buying into the market.
Yeah.
And then you've got people selling out of the market, whether that's, and it's not net zero because, not net because 35% of the investors are selling to other investors. Mind you, some owner-occupiers could be selling to investors as well. Let's not forget that.
Yes.
But I think that's, I think the cost of holding a property outside your interest rates has gone up, and insurance has gone up. Strata levies look like they might be going up. Mind you, some of the kickbacks might be going down.
Definitely gone up.
Yeah, and certainly cost of living pressures as well. So there's lots of, and this is in the face of rising rents. So the rents haven't covered the increase of costs. And I think there's this sort of idea. I know that one of the questions in there was about, do you intend to increase rents to cover the costs? To be honest, probably I should have spoken up before the survey went out to say I don't really like the premise of that question, because it sort of sets it up that, my costs are going up, so therefore I'll just increase the rent.
I think wasn't that about if government continues to increase costs? I think that was the question.
Yeah.
So it was more about it was inferring about government intervention increasing and
the
holding costs generally. Just not like, because I think there is another stat in there, you probably have it in front of you there, Veronica, that, whilst investors indicated that, for example, their annual interest rate bills had increased by tens of thousands of dollars per year in the last couple of years, and we have seen an increase of a variety of other holding costs. 55% of investors had only passed on less than 10% of those total operation costs via way of rental increases. And that was the same as last year, and that's completely the opposite narrative that we see all the time in the media and that we see by left-leaning politicians, and which I often talk about when I go to these stakeholder meetings and they give me the opportunity to open my mouth, but they just don't believe us. And so, there you go, 55% 2 years in a row where 55% of investors are passing on less than 10% of their total increases in operational costs to via way of higher rents. I mean, that is just a tiny amount, And yes, and I often, when I asked about these things in the media, I usually just give my own examples of how much my mortgages have gone up versus how much my rents have gone up. Unsurprisingly, those never make it into any of the stories that I'm interviewed for.
No, and it is very frustrating. It's frustrating to me too, because the reality is you can only put the rent up what the market is prepared to pay.
That's right.
It's not as simple as saying, oh, well, my costs have gone up, so therefore I'm going to
jack
the rent up.
Here you go, your rent's for $500 a week or whatever, and you turn around and you go, here's a $500 a week increase, because that's actually how much.
Nice would that be?
I know, but that's just it's just completely never ever going to happen. It's more like that you put it up by $50 a week.
And on the flip side of that, I wasn't, me personally, you talk about personal examples, through COVID, yes, interest rates went down, but I wasn't necessarily able to pocket that because I was on part of my loan was on a fixed rate. And the rates went down. My loan was fixed at a higher rate, and my rent plummeted, and I had to suck that up. And this is the reality of the investor story. And I guess this is why it's the sort of pressures that investors have been under. And if they get to that point where it's a final straw and they sell, and this is, I guess, the general narrative doesn't accommodate for that, which is pretty sad, really. Especially given that 90% of our investor stock, our rental stock is owned by private mostly individual investors.
Yeah, 100%.
So is there any positivity in this report?
I think there's heaps in there. I mean, okay, buying sentiments perhaps down a little bit compared to what it was a few years ago. That's probably a result of, these higher interest rate conditions. I mean, you can want to buy all day, every day, but if you don't have the ability to secure finance, well, it's just a pipe dream. And that's probably more to do with anything else because, there are so many great opportunities out there around the nation for investors. What I found really interesting in the data is that Melbourne was seen as the number one location. Was it number one? I think number one location for property investment at the moment, which is perhaps some counter-cyclical thinking. One would think that you could be right. Last year the survey respondents said Perth was the number one location for investment, and they were right, as it turned out from a capital city point of view. But I think, on the whole, investors remain, positive about it. They have intentions on buying. It's clear, though, very, very clear in the data, and it's not one of the stats that we've talked about yet, but, when asked which were the best and worst states for investment, number one by far and away in regards to the best state for property investment was seen as Western Australia, and the opposite of that was Victoria.
Now, interestingly enough, if you look at the locations that people bought in the last 12 months, and I think this is fascinating because the most amount of people sold in Brisbane and the most amount of people bought in Brisbane. So go figure.
I know, but what was really interesting in the stats, and as I say, we have got this new platform being created, which is going to allow us to create some really, really rich data sets. I'm really excited that, not only can we use at PIPA events or, perhaps create special reports for our members, but it's really just going to provide a much richer data. But one of the questions that we did have in there that wasn't actually in the report was where the survey respondents owned properties, because we never asked that one. You kind of, oh shit, we should really ask that one. But I can't remember what the exact percentage was. But on a national level, the location where most survey respondents owned a property was Queensland.
Interesting.
And it was Queensland, and then I think Victoria and New South Wales neck and neck, number 2 and 3, or something like that. So, what does that tell us? Does it tell us that the people that answer our surveys more lean towards having properties in Queensland, or does it say, do you know what, we've always known that there was strong interstate property investment in Queensland? So therefore, if you kind of go, okay, well, if the survey respondents own lots of properties in Queensland, then it stands to reason that they probably sell more in Queensland than elsewhere, and potentially their propensity is to buy more in Queensland too. So that's the way that I'm kind of looking at it, without being able to do these extra, data searches and things that we'll be doing. But that was something that we didn't know before. I mean, I think we always knew that a lot of people bought in Queensland, especially the last few years, pre-COVID, but perhaps that's why.
Nicola, what do you want to say? Add a bit of a time to a bit of a plug for PIPA, to be honest. But I mean, what are some of the breakthroughs you think as an organisation you've made? I mean, there has been a proliferation of new buyers agents into the market. You talk about those states that have done well for investing. A lot of those are playing in there. A lot of them never even lived in those areas before. They've just maybe not even visited that many times, to be honest. How are PIPA dealing with that? And yes, we want to increase the standards. That doesn't mean anyone can just join and get a badge.
No, and also it's important to recognise that PIPA is an association for anybody who works in property investment. So while we do have very strong numbers of buyers agent members, we have strong numbers of people who are mortgage brokers and accountants and conveyancers, people that work in education, people like me that are journalists or work in PR. So we're a membership association for anybody who wants to show the world at large that they want to agree to our code of conduct. They want to be ethical practitioners. They also want to improve the standards of everybody working within the industry by completing our qualified property investment advisor training program. And that training program, over the years we've had hundreds of students through that program, and a lot of them have been buyers agents. And because our industry is not regulated, so therefore you don't really need to have any type of level of education to be a property investment advisor. PIPA many years ago created our own program to ensure that the people that were working in our industry were as educated as possible, because they weren't required to do anything outside of their normal licensing provisions in their state and territory that they operate. So over the years we've grown and grown and grown, and with that reach allows us to attract more and more members who are prepared to hopefully do the course and to abide by our code. We also, we are still a small-ish non-profit membership association, but I would like to think that our reach is getting, wider and wider. Our level of influence is getting more and more and more at all states of government. And actually, funnily enough, before was why I get so many views on your podcast. Like, no, I was on during the PIPA webinar before, and this phone number came up on my phone, and I went, "Oh, who's that?" And I realised it was the Shadow Victorian Housing Minister.
You're so well connected, Nicola.
He's actually speaking at our PIPA conference next month in Melbourne, people. But we do look, and answer to your question in a very long-winded way. It's been a long day, Chris. One thing that people need to know about us is that we're not a toothless tiger. I've been involved in membership associations for nearly 20 years and in the property industry, and I think that and the board has always been supportive of this, including my current board as well. If someone's out there doing the wrong thing, we will find out and we will investigate it. We have a legal and risk committee and we will do something about it. We have terminated PIPA memberships before, and you can find out more information about that on our website. So as I say, in lieu of, anything really out there, we don't have regulation. Obviously, you've got the state and territory legislations if you're a licensed, real estate agent or buyer's agent in whichever state or territory. But what we really rely on, and we do have the resources to look into it. We're lucky in that way now. Thanks to from the support of our sponsors and also the support of all of our members. If consumers or other people have concerns about anything that they might be aware of in the industry, please drop us a line, because we will. We look into every single complaint or anything like that comes our way. We'll look into it. I mean, over the years, we've actually looked into stuff that these people weren't PIPA members. They're often not PIPA members, but we will always try to do whatever we can to provide consumer protection because the government has never done that. And so we decided many years ago that we would try to be self-regulatory and fill that gap because, unfortunately, look, are they ever going to regulate our industry? Who knows? We've been lobbying about it since 2005. What's another 20 years? Who knows? But in the interim, then having associations like PIPA and other aligned associations provides that really much needed consumer protection, notwithstanding the fact that the vast majority of people out there are doing the right thing and have their clients' best interests at heart. However, if someone is out there and they think they have something that they would like to share with us, then I would suggest that they can contact us via the PIPA website and we would look into it for them.
I would actually add something to that, Nicola. I would say that in the buyer's agent space, I think there's been such a proliferation of new entrants with very low barrier to entry that actually the majority are not doing the right thing. And so therefore it's actually very important for consumers then to turn to organisations such as PIPA and also REBAA if they're looking to engage a buyer's agent. And it's not to say that everybody's going to be the best operator in those associations, but that is a standard by which it's not that easy.
Benchmark.
We've rejected some membership applications on the board of PIPA has. I know REBAA has a barrier to entry and has rejected some and also terminated some members because they have not abided by either licensing, appropriate licensing, or they've not abided by a code of conduct, code of ethics. And so at the very least, you've got associations that do have consumer considerations are very much at the fore of what they're about and what they're standing for. So from a consumer's point of view, I think to look for a member of PIPA or a member of REBAA, then that's the first step. You've also got to go beyond that and make sure that you check the credentials of those individuals or those businesses. But and I think that the vast majority of buyer's agents, for example, are not members of either organisation. And so so let's just. And I'm not saying everyone that's not a member is no good, but I think use that as a starting litmus test.
Yeah, and I would love it that we, at some point, I remember because obviously I used to work at the REOQ many years ago and I was helping them put together this book celebrating the 90 years of the REOQ. I think there are 106 now or 7 or whatever it is. And I was going back through the old library that they used to have, and they had this wonderful piece of marketing from like the maybe the 1930s or 1940s, and it was just one person whispering to another person saying, but they're not a member of the REOQ. And I loved that, and that stuck with me all these years later, that I would love that the first port of call, and thank you for reminding me that I probably should have said that, but that, for the first port of call, checking their licensing, but come to the PIPA website, go to the REBAA website, check that these people are members of their appropriate associations, and there are other associations, certainly depending on what sector they work in. And if they're not, just ask yourself, why not?
Yeah,
because that's what all we hear about is consumer protection, raising the standard of the people that are working in our sector, code of conduct, professionalism and ethics. So if people are not members of these types of associations, consumers need to ask themselves, why aren't they?
They also might not be insured, so that's another thing.
Well, then, that's what I mean. Why aren't they? What are the reasons why? And they ask that question. If that person doesn't have a satisfactory answer for you, well, you hang up and you move on.
Yeah.
The good thing about PIPA, I do think there's a multitude of strategies. You're not sort of strategy agnostic if you're not buying what we all believe in. It's a bit of a cult. There is, when you look through all the members, there is, and they're all going to have different opinions and believe that their strategy is better than the others. So it's, but there is there's an element of trying to raise the bar, right, and a minimum standard of the things that we won't do. And and some strategies prove themselves really good in short times, and maybe not so much in the longer term. And so I think that's rather than REBAA, I think that it is, more of a cohort. I feel like it's a different sort of group, and they're doing great things for the buyer's agency industry as well.
Yeah, and like just from the fact that we are multi-sector, that means that we, are much bigger as well, and we do have hundreds of members around the country. So I think we are a very different beast, I suppose you could say. One of the things that really, in regards to PIPA has always stood out is, the fact that you have to disclose any commissions that are paid to you in a variety of ways. That's been I think a stumbling block for a lot of people that either haven't even bothered applying to be a member of PIPA, or they have started going through it and went, oh no, I don't want to do that. And again, you could ask, well, why not? That would, I think, with the next marketing campaign, Veronica, is we need to do that.
Yeah.
Just piggybacking
They're
off
not
that
a member of PIPA
those years ago. So and we're out there, educating our members, encouraging them, but also helping consumers where we can. And it's great to see the association. As I say, I'm coming up in December of 10 years on the board, and over those years, we have changed quite a lot. I'm very, very happy to have been at the helm these last couple of years.
Nicola, have you got a property dumbo that you might have?
Well, not recently, because last time I came on the show, I told you about my apartment that I owned in South Brisbane.
Your own story.
Yeah. So since that time, I don't really have anything to add to that.
I love that you only think that it's your dumbo that we're asking for.
I thought you meant my personal dumbo again. I'm like, well, you already asked me that question.
How gorgeous is that you just completely willing to fall on your sword like that? But no,
I know,
do you
I
have
don't
an
mind
example of
about
something?
The times I've stuffed it up.
Have you got an example of something you've observed somebody else has done?
Oh, recently. It's a very, very, very good question.
Or just a random story, even if it's not new.
I don't know if I do. Like, this is a bit strange, isn't it? I've been in too much survey land for the last 3 months.
We forgot to prep you for this.
Yes. Not that I'm aware of, although I was at a meeting a few months ago, one of these great stakeholder ones again, and it became apparent that and that's why we put the question in the survey this year about, who use the services of professional property managers, and I was really glad. I think it's 96%, wasn't it? But then that means that there's 4% of people out there who are trying to manage their own properties.
We're going to call them the dumbos, actually. Seriously.
That's dumbos. Do not try to do it. We've just spent the best part of an hour talking about the changing goalposts, that is property, variety of different property laws, taxes, rental reforms. Why on earth you would try to do that yourself when, generally speaking, depending on which state and territory you're in, the fee that you have to pay your property managers is very moderate compared to, what they can and do on your behalf. So I would think, if you think that you can do a better job than a professional in any industry, but certainly in property management, then you're a bit of a dumbo.
Yeah, I'm with you there. And it's interesting. I mean, we just
launched... Why would you want to? It's such a terrible job.
Well, it's a challenging job, Nicola. It's actually a very rewarding job.
It's rewarding and just very challenging. You're a people person.
Now that I also have a property management business, we've just launched Preferential, and I've got into business with my original boss from when I first went into real estate. So Kate Lawden was the half of the Lawden sisters, and she ran the property management. So Kate and I have reunited and started Preferential. It's really interesting, though, their level of compliance. From my point of view, Kate's on the ground. She's operations, right? So she's the one looking after all of that. But so now I'm getting a bird's eye view of the high degree of compliance that needs, apart from care, a lot of care and proactivity and professionalism and expertise and understanding, all that sort of stuff. But yeah, the compliance in New South Wales, and that's here. I mean, it's tougher in Victoria, as we've discussed earlier, and it's going to get tougher. It's going to get it's going to be more things to comply with, shall we say?
Challenging.
To do it as an individual, oh my God, I just cannot understand why anyone would want to.
Feel free to cut out the bit where I said it was terrible. I meant challenging.
That's all right. It has a reputation of being a terrible job for good reason. You get yelled at quite a lot.
But also, hence my point. It's always been tricky.
Thankless.
It's getting trickier, and so if you are a savvy investor, you need to work with professionals in every step along the way. And certainly when something is important, and it is like one of the most important things that you're going to have, and during the course of your property investment ownership career or journey, is having, good professional property managers in your corner.
Well, it really maximises, we really focused on maximising the income. So it's not just on rent. There's other ways to improve the income, maximising the income, and also the keeping that property in peak condition so that you increase the value of it. And this is the focus that really needs to happen, a real professional approach to asset management effectively. And, you get a good property manager. Honestly, your investment journey is a hell of a lot better than it is if you don't have one.
Honestly, I've had some really good ones, and geez, I've had some shit ones.
We all have.
Honestly, the worst was one time I had my dishwasher was leaking in my apartment in the city in Brisbane, and the poor boys that lived below my apartment had tried to get hold of the property manager for a couple of days. My mum had just died, and so I was, on the couch, not up to much. And they knew that my mum had died, and so, the boys weren't going to hassle me. It used to be my PPOR, so they knew me very well. And then, so then in the end, though, after a couple of days, they had to ring me and say, look, Nick, so sorry for bothering you, but we've tried to get hold of the property manager for a couple of days, and there's water coming through our light fittings.
Oh my God, yeah. So shocking. Presume you got rid of that property manager. Too sweet. Yeah. All right, there's another dumbo. Okay.
Thanks so much,
it doesn't take
Nicola.
long. Scratch the surface. There's plenty of dumbos. Thank you so much, Nicola.
Thank you. I'm looking forward to 60,000 views this year.
Yeah.
No pressure.
Yeah, no pressure at all. Thanks so much.
If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us and hear what our amazing guests have to say.